All right, we are now recording. So once again, this is the smart money method. We have 3 confluences. Can somebody name for me the first confluence of smart money?
The inefficiency?
That's the second one. Do you know what the first one is?
Liquidity.
Exactly. First confluence of smart money is liquidity. For those of y'all who don't know, liquidity is essentially, in retail terms, support and rewards. So you can spot liquidity through a bunch of wicks touching the same area, a bunch of candles bouncing off the same area, all that good stuff. So if you look right here at this chart, look where all these wicks keep hitting, right down this area, right? All this, nothing but liquidity. Why? Can someone tell me why liquidity is important? Well, what's below liquidity? What are retail traders? If retail traders are expecting price to hit this level and do what?
Shoot up.
Shoot up. And below it, they have their stop losses.
Stop losses.
Exactly. This is, remember, every time a retail trader gets stopped out, we're making money. So you want them to have stop losses because that's how we make our money. So, say what? Yeah, I believe you said the banks are going for that. Yeah, I believe that's what you said. So, number 2, what is the second confluence? Someone said it earlier.
It's inefficiency.
Inefficiency, that's right. This has many names: inefficiency, impulse move, etc. It's all the same. Not really the same thing, but I'm not going to get complicated, but you get the idea. Impulse move. Y'all all enter the exact same time. All right. So yeah, the second one is the inefficiency / impulse move. That is going to be the dramatic move down that's going to stop out all the retail traders. That is this right here. You see how these candles just break through all this liquidity? And why is it important that it breaks through liquidity? What has happened?
It's collected all the money down there as far as stop losses.
All those stop losses have been collected. Correct. So then what is the third confluence of smart money?
Where am I? Dang, I forgot what it is.
The OC, outcome candle.
Outcome candle, thank you.
Yes. Now, depending on your method, this goes on many names. You can say OC, order block, outcome candle, area of interest. For outcome reach's sake, we're just gonna say outcome candle. That way we all are using the same words. So this is called the OC, outcome candle. Yeah, please. If you all are not talking, please mute yourself and unmute yourself when you start talking. Maybe I can just mute y'all. That might be a good idea. Can I do that?
Yeah, you can.
Yes, sir.
Okay, Brian's on here. Brian, you know how to mute people?
I mean, give me the privilege.
Yeah, make him the co-host, and then he'll be able to mute people.
I know good and well. I don't know how to do all this. Oh, here we go, right here. All right, who's this? Yeah, I'm just gonna mute y'all. If y'all want to talk, just unmute yourself. That's all that is. Just we don't have all the background noise since it's gonna be recorded. All right, so next, the OC. That's what you said, correct? The OC is just gonna be the engulfing candle. What does that mean? That means the candle is quite literally engulfed. That's simple. Right here, this is what the engulfing candle looks like. So when you see the engulfing candle, you're gonna put your sell limit right here on the body of it, and you're gonna put your stop loss at the top of it. And that's it. It's that, well, get y'all some color coordination, it always helps. It's that easy. Then guess what? You walk away, you go take your dog for a park, you go drink champagne, you go read a book. I don't care. Regardless, you do all this, you're done. That is how simple this method is. So let's see what happens. There it goes. And it just falls. So let's see, what did you risk? In this trade, the risk was about 30 pips, which is actually a really high risk. We don't usually go that high. But price went down 162 pips. You can't lose with that risk to reward. Y'all see what I'm saying? All right, let me know if that makes sense. You know, y'all can go down
Perfect
to yourselves. All right, bet.
Now, that's a quick question.
Yeah, go ahead.
Does it matter how large that engulfed candle is? Because this looks like a pretty small one, you know, so the risk would be nice. But if it was kind of a bigger engulfed candle,
Yeah, so if it's bigger, what you would end up doing is you would go down to the smaller time. Okay, so let's say you look for this candle right here, and it was big and had a huge risk, correct?
Mhm.
You would go to the smaller time frame, and you would just you go smaller. I'm not going to go down because if it does, it's going to exit me out of replay mode. But you would go down to like the smaller time frames, and you would eventually see the candle on like the 30-minute time frame, and you would just shrink it down. But I will caution you, those have a higher chance of getting stopped out. So what you really want to do is you just want to go for the big candle with a smaller lot size. That's how you do this. Yeah.
Cool. All right, thank you.
Yeah, Max. We usually don't want to have a stop loss above 20 pips, but there are some times where it's going to be like that. UCAT is a pair that, you know, it'll barely move, it'll be 20 pips. So sometimes it'll be up there at 30 pips. You know, if it is, just do a smaller lot size. Now, if you're in a smaller account, well, then you're kind of stuck, but you should be in a bigger account anyways, really, if I'm being honest, just for smart money standards. So next, I'm going to go find some, well, first of all, you got any more questions? Brian, I'll check out, we'll mark charts up in a minute. No questions? All right. Well then, let's find another example, and I'm actually gonna let y'all guide me through this next one. See if y'all just kind of were taking in what I said. So let me find y'all something. Is that the one I just did? I'm pretty sure it is. Okay. But yeah, this method, the risk to reward, is so good that you can't lose. Once you get this method down packed, you can't lose. Like the risk to reward is just too good. All right, so tell me what you all see right here. All right, let me start cold calling people. RBR, yes, but for this video, this is just an introductory video. I'm not gonna get too in depth of that. So let's just say it's outcome candle. So number one, liquidity. What do I see right here? All these wicks in the same area. That is nothing but liquidity. Above this liquidity is stop losses. This is where all the retail money stop losses are. You want the stop losses to get stopped out, which you did right here. And then what do you see? Your outcome candle. This is going to be a buy, of course, because price is up there. So you're going to put your stop loss at the bottom, and you're going to put your buy limit at the top. Correct? Makes sense?
Yes, sir.
All right.
Yes, sir. It makes sense.
But yeah, just feel free to jump in, ask questions, make comments. You know, I like having conversations about this stuff. Hold on, let's see. Chat.
I have a question to ask you.
Yeah, go
Is
ahead.
it okay where you got that green line? Is it because the candlesticks are flat?
No, because this is the OC. Remember, you put these, when it's a buy OC, you're going to put your buy limit on the top of the candle, right? And you're going to put your stop loss at the bottom of the candle. So that green line is just right there on the top of the candle.
And these were stop losses. Oh,
go ahead.
These were stop losses for sell executions, right? And the liquidity area that you marked.
This one in particular is a buy. Because why is it a buy? We're expecting price to eventually come back down here, hit that area, and shoot back up. So that would be a buy limit. Now the previous example was a sell because we were expecting price to shoot up, hit the OC, and then fall.
Yeah.
That makes sense?
Okay. Yes,
All
makes sense.
And let me see. Someone said something in the chat a minute ago. The buy limit would be above the OC. Not necessarily. No. Unless there's a big old wick, which I'm going to get to in a minute. No, it's going to be right there on the OC. So, yeah, let's see what happens. Oh, remember, but this is a very simple method. When done right, it should be fairly tedious and boring. That's how you know you're trading right, when it's boring. Trading should not be that exciting. So you set your limits. You go out and you say, you know what, let me just go do some stuff, hang out. While you're doing stuff, hanging out, the market's going crazy. Did I do this in the right time frame? What just happened? Oh, okay. I actually marked the wrong outcome candle. Oops. Where'd it go? Yeah, it's recorded. I got y'all. Okay, so we're just gonna scratch that one. I marked up the wrong. Yeah, here it is down here. So
Yeah.
it was supposed to be this one, not that one.
That makes sense.
Welcome everybody. This session is recorded for everything that you all missed. Yeah, so it was supposed to be this one, not that one. That was my fault. Because this is the liquidity was broken. Yeah, that was my fault. It was supposed to be on this candle right here, not that one. So yeah, you see how prices kind of hit it and then shot back up. That's what you're going for. That makes sense, everybody?
Yes, sir.
All right, y'all got any questions for I move on?
I got a question about the liquidity.
Yeah, go ahead.
So for the buying outcome candle, is the stop losses that you mark with the dollar sign, are those stop losses for sales that retailers were trying to make?
No, this is just symbolizing the where the retail traders have their stop losses.
Retail traders have their stop
Yeah,
losses.
that's not. Yeah, that's just I kind of do that later on, so I can have a visual of what retail traders are doing. We don't go by what they're doing. We go exactly what the opposite of what they're doing.
Mm-hmm.
You see, you use hour A. What other time frame can we use? Max, this works for every single time frame. If you want to scalp, you can do this on a 5-minute time frame. Matt knows a guy who does it on 30-second time frame. This can be done with any time frame. That's the beauty of it. If you like sitting in front of your laptop all day, you can go on a 1-minute time frame. Now, remember that, of course, you want to really go for the higher time frames, usually around at least an hour, because remember, you don't want the whole point of this method is that you're not sitting in front of your laptop all day. So try to go for at least the hour time frame. But I'm going to go ahead and move on. So one thing I did not mention, let's say that you have an outcome candle with a really, really, really long candle, right? And you notice, you're like, okay, this is a super long candle. It's just like a really itty bitty candle, but it has 2 super long wicks. So you're like, okay, do I put the buy limit on the wick or the body? That is where this next topic comes in. Institutional numbers. Y'all get out a pen and paper or write this down, or y'all can just screenshot it. So these institutional numbers are where the banks unload their orders, and they are as follows: 00, 20, 50, 80, and sometimes 05, but not always. So whenever you go to set your limit, you're going to be sure that your limit falls on one of these numbers. Where do you find these numbers? Right here. So you look 1.34500. That's the 00 institutional level. Make sense?
Makes perfect sense.
All right, I'm gonna go ahead and find an example, one more, so I can just kind of go through the idea of institutional levels with y'all. And after that, we're gonna go over some back testing stuff. Yeah, so once you get this, I can give as many calls as I can, but you all won't truly understand it until you begin to back test. So I will tell y'all that right now. back testing is key. It'll help you identify which outcome candles are correct, why they're correct, etc. And it'll really give you this fingertip feel to know someone on some chart say, is this correct? You can pretty much either say, oh, that's not gonna work, or oh, it's gonna work. It's that those types of moves. So, did I do the right candle? Did I do the right candle? All right, so yeah. We'll go over one more for y'all, before I go move on to some other stuff. What's the first thing you're looking for with smart money? Someone tell me.
Inefficiency.
Liquidity.
Liquidity, shit.
You got it. All right, liquidity. I think that's what you stands for. Yep, liquidity. Y'all said it. Look at all these wicks hitting the same area. That's liquidity because traders are going to expect this. It looks like wicks on this time frame, right? But if you go into a smaller time frame, it's just going to be price going up and down and up and down, hitting one single area. Make sense? But it's just like wicks because right now it's on a higher time frame. So you got liquidity right here. Above it or below that liquidity, you got all these stop losses. Then number 2 is the impulse move. This large candle slams through all the liquidity, right? They've all been stopped out. Number 3, you have what is called your outcome candle. It's the engulfing candle. And we're gonna go over institutional levels for this one. So how you find the institutional level or matched up, you just go ahead and click and get the line on the bottom of the candle, right? Then you want to click that line, hit settings, and it'll give you the coordinates right here. See how this is 30623? Remember, the institutional levels are 00, 20, 50, 80, sometimes 05. The closest one to 30623 is that 20. So you're going to change this 23 to 20. Just like that. That's how you line it up on the institutional level. Muhammad, I'll get there in a minute. Then at the top, that's where you're going to put your stop loss, of course. And here's the difference. So you want to put your entries on institutional level. Your stop loss is never to be on institutional level. Why? Because price will come up, hit your stop loss, and then shoot back down. And they only hit your stop loss because your stop loss is on the institutional level. So you want to make sure your stop loss is not on 00205080. This one is on 41. We're good. Man, you just go on about your business, do whatever you got to do. You check in later. You went, oh, price fell. There it went. That easy. You risked 12 pips. That thing went down 150 pips. Make sense?
So you place your limit on the institutional level and your stop loss on
stop loss never on institutional level, but your limit should be an institutional level.
Yes, limit on institutional level, stop loss above the outcome candle.
Above or below, depending on if it's a buy or sell. Yeah.
Okay. Okay, yeah, above or below.
Yeah, you got it. Let's see what y'all say. What should take profit be? All right. Yeah, that's one thing. Thank you, Max. Take profit. Everyone has a different way of doing this, and it really just depends on what you're going for. Some people have a specific pip number they're going for. Like, for example, maybe you say, I just want 80 pips. You could just set your stop loss on 80 pips. Another method is you could put your not stop loss, take profit. You could put your take profit at another outcome candle. Let's say you see an outcome candle down here. It's not one. This is hypothetical, so don't be asking where's the outcome candle. It's not down here. But hypothetically speaking, if there were an outcome candle right here, you could put your stop loss right there. What I usually do is I put my outcome candle. How many numbers? Okay, give me a minute. What I usually do is I put my take profit on liquidity. So you see all this liquidity right here? That is where I'll put my take profit, right there. Make sense? All right. Let's see, what did you ask? How many numbers after the dot? 2. 2 numbers. All right, next. Let's go over some back testing stuff right quick. This is, look, I'm gonna say it once again. I'm going to keep emphasizing this as much as it takes. You will not get this until you put the time to backtest. So here's how you backtest. Go to a random pair, get you a cup of coffee or energy drinks or Cabernet. I don't care what you drink. Just get you something because you're gonna want it, or water if we like our fitness. And you just want to just go back in time and you just want to mark it up. Use the last. All right, let me go over this right quick. All right, so institutional levels are 0, 0, 2, 0, 5, 0, and 8, 0. For example, right here, you see 1.30500. You're gonna, those last two digits are the institutional level. Well, this one is gonna be that 0, 0. Make sense?
Yes, sir.
All right. All right, so now, yeah, so this is how you backtest. Just get you something to drink, I don't know, a blanket. Just make yourself comfortable because it can get kind of annoying, but you know, look at it like you're building a muscle. It's gonna hurt before it gets better. Hey, P. All right, so what you wanna do is pick a time frame, and what I do is I do like 2000 or something like that. And then you hit enter. Find it, where'd it go? There it is. So then what you wanna do is you just want to hit replay. What just happened? Okay, hold on. Actually go to 4 hours, so that one's doing something weird. Chart, there it is. You gotta do that sometimes. All right, so you would just go in replay mode, right? And then from there, you would just treat this like you're live trading. You would mark up the charts. You would go to the different time frames to try and find
what your brain was just talking about.
and you're gonna mark it up.
Just talking about.
You're gonna mark it up and you're gonna do it just like you're live trading. If it works, you're gonna write down why it works, take a screenshot for later. If it doesn't work, you're gonna write down why it doesn't work. Make sense?
That makes sense.
Hit play like this. And yeah, you just go ahead and find plays and then you just see if they work. That's how you backtest. I spend about 30 minutes every day doing this. Yes, it seems like a lot of time, but this is also a job that can generate you thousands of dollars per day and up to millions of dollars per year. So I think we can all take about 30 minutes out of our day to do this. It'll make you really good, and yeah, just
$1,000 per day, $1 million per year. This is that kind of job.
This is what I do that I'm actually going to share with y'all. I have a flashcard Discord for people that I help out on the side. And every time I find a good setup, I screenshot it and I put it in my Discord. They're like flashcards. I can reference them for later, just like this. That way, you know, before I mark up my charts when I'm actually trading, I'll just go through and look at these flashcards just to kind of give myself a mental refresher. And yeah, it helps because it kind of gives you that fingertip feel. You see all these correct setups. You're going to see a correct setup. You're going to know exactly this one is going to work. So that is something I highly recommend. Any questions about backtesting?
So would you recommend, like when I asked that question earlier about, you know, if you have a larger engulfed candle, maybe put the limit on like maybe the tip of the wick and then the stop loss, the body,
that
the edge of the
you just want to put them on the closest institutional level.
institutional. Okay.
Yeah. Remember, you want to try to mitigate your risk, but not at the expense that you're going to miss a move. Because when I first started, that's something I used to do. I would try to make my stop loss as small as possible and not miss the entire move because I was just trying to mitigate risk. So be careful to not do that.
Okay.
All right. Hit me up with y'all questions before we start marking charts up. I'm only going to mark a couple up.
What's the difference between this and
Rifleman.
playing off the order block?
No,
don't use
Coming
it.
I do. I can't use it for this.
What's the difference between this and what?
And order blocks.
Order blocks. Order block is a specific type of outcome candle. Really, we just call them outcome candle for smart money terminology. But
Okay.
if you go into like we have a course, Outcome Reach, where I actually learned everything. If you go and take that course, highly recommend, by the way. They just updated their website and everything. They will get super in-depth and explain everything. So highly recommend that. All right, so let's go ahead and look up some pairs. EU. All right, so remember, Thursday, Wednesday are the two best days, specifically Wednesday 8 to 12, because that is the busiest day of the week at the busiest time of the week. We already missed that, and like I told y'all earlier, I usually get the majority of my trades right. It's usually middle of the night on Thursday. That, I don't know, that's just kind of how I do things. Why? Once again, I don't know. All right, so EU, what you want to do is start the higher time frame. What's the overall directional bias? It's an uptrend. It has not broken structure, so we're going to continue looking for buys until it does break structure. This could be possible distribution. I did not get in a white call, and I'm probably not going to for the sake of this call. So it's possible that things could begin to sell. So we're going to watch that. And you just keep looking down the time frames. I don't see anything. Nothing's screaming out at me right now. Yeah, I don't see anything screaming out at me right now. So I'm not gonna do anything for this pair. So Kylan say OC has been mitigated and comes back up the second time. No, if the outcome candle isn't mitigated, you don't go for a re-entry. Sometimes it will give you a re-entry, but that's usually purely coincidental. After it's been mitigated, you don't go for the re-entry. UCAT. All right, Brian told me to check out the UCAT 4 hour earlier, so let's go ahead and look at that, and then I'll let y'all tell me what there's.
Go to 2 hour, not 4.
What you saying? Oh, this right here? This what you're looking at?
Yeah.
All right. This actually looks like a very valid setup. Let me tell you all why. Look at all this liquidity right here, all these wicks. I cannot stand that time limit. All these wicks. Above that, you're gonna have all these retail stop losses.
I got an entry at 31,180. Okay, for buying.
31.80. Yep, right there.
Yeah.
31. Yep, right there. And like Keith said, that's on the institutional level. That 80. So this is where the entry is going to be. Remember, just click it, settings. Oops. Change that to nearest institutional level 80, and there it is. That is going to be your entry, and your stop loss is going to be down here. And I already said this earlier. Not on institutional level, so 3.9, you're good. Remember, UCAT is very risky as far as pips go, so it's probably going to be a lot. Yeah, that's about 24 pips, but the risk to reward is pretty good. So I'm actually going to look at putting a take profit probably around all this liquidity right here. So that's my thoughts for UCAT. What other pairs y'all looking at?
Jay, well, not for a current entry necessarily, but there's an entry that I looked at yesterday.
Oh, that GJ entry?
Again?
That GJ entry?
Yeah. Oh, I think I sent it in the Discord actually. So
okay.
Probably what I'm talking about.
As you beggars, you're gonna have pairs that you just don't like. I cannot stand GJ. I'm just gonna throw it out there.
I love GJ.
Everyone seems like everyone has looked at that pair except me.
Oh, gold too. Gold.
Did you catch this one?
Mm,
Did you catch this?
I did actually.
Nice. Yeah.
I did. Yeah, I did.
Nice.
Yeah, I love gold and silver. I trade a lot.
I don't trade entities. I'll tell y'all that right now. Or metals. And ever since
not
below zero, I don't trade them either.
I trade silver. Sorry, not SPX.
Okay. All right. Ooh, looks like this one just activated. Look at that. It's already shooting down on this UJ. Price is probably going to come down to about right here. before it goes on that rise again. Interest on the 2-0. Why are there ants on my desk? Excuse me. Interest on the 2-0. You're gonna put your stop loss right down here. So this is my thoughts for you, Jay. If y'all want to go ahead and just mark that in right quick. And that's actually the last parallel markup. I can't give y'all too much sauce. That's outcome.
Yo, let's keep going.
Nah, you good. All right, y'all got any more questions?
That's it for me. Appreciate you, man.
All right, yeah, always. I'm here for y'all. And I should stop loss right there. Watch 300. All right, well, with that said, I'm going to go ahead and end the call. You know, hope y'all have a blessed day. Just keep on back testing, keep marking them up. You know, y'all can hit me up on Zoom if y'all have any questions. Not Zoom, on Telegram if y'all have any questions. Outcome Reach is the course to do because they will teach you everything. All right, well, hope you have a blessed day, and I will see y'all next time. How do I stop?